The bears continue to attack as the bulls defend support. Can the bulls hold on? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the bears should continue pushing down into the support area where the bulls should defend, and then we should look for a move higher, and we saw about half of that yesterday. The market did push down into support, and the bulls did defend. However, they were unable to really push it higher. Now the question is, can they hold on? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the bears pushing down into support, the question is, are the bulls able to defend and hold on? So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. We got a couple ways to view what we're looking at. We're still going to hold on to the ABC setup that we've been talking about for a while now, where we would be looking for this B wave down to hold support and then push higher from there toward the 4,300 area that we've been talking about since October. And what we're looking at is essentially a pretty extended wave here, and C waves and wave threes can extend, and that's why you see the two different counts on the chart. So you have an A, B, C down, which would be the B wave down, and then we'd look for C higher up toward the 4340 area, or we have a 1, 2, 3 down, and we'd look for a 4, 5 to complete that move down, and that could potentially be a wave 1 of a C wave to the downside that could take us as low as 2,600. So what we have to decide and figure out here is, which one are we in? Now, I don't love it as an impulsive move because of the overlap here at the top, but it is technically valid to be a 1, 2, 3, and then a 4, 5. Now, as the C wave down, we would still be in 3 of C because we don't really have a 4 and 5. So this 3, 4 applies in both cases, whether it's the C wave or the end of a wave 1. We would still look for an overall completion after a wave 4. Typically what happens is you get the move down, you get kind of a fake breakout to the upside, which is what a wave 4 is. You get one more push down that's a little bit weak, and then the real buyers start to take over, and they will either bounce it in an ABC or they'll bounce it in a C wave higher, and we'll talk about both scenarios. So in the bullish scenario, okay, this would be wave A, wave B, and then we've got down here wave 3 of C. We're looking for wave 4 of C, and then wave 5 of C that needs to hold around that 4,100 or above area. And then we'd look for the move higher in an impulsive move. And what all impulsive means, guys, is 5 waves. So we'd look for 1, 2, 3, 4, 5 to get things started, and a wave 1 of C, and then you look for a 2 of C and then a 3 of C breakout that would take us back over these highs and into the 4,300 range, and then ultimately looking to culminate at about 4,340. So that would be the bullish perspective on what's going on here. They are still above support, and as long as they're over 4,100, I am giving the benefit of the doubt to the bulls, as we do have a whole bullish setup, and the whole chart and pattern looks better with one more high. So that would be the bullish scenario. Now, in the bearish scenario, we're in a similar type setup. Okay, but instead of A, B at the top, you have 1, 2. So you'd have 1, 2, so it'd be wave 3, wave 4, and then you'd look for wave 5 down here, and it could be a little deeper. You know, it can go as low as the 40-80 area or so for wave 5. And then we would look for an ABC higher corrective move. So an impulsive move means 5 waves. A corrective move means 3 waves. So you'd look for an ABC that retraces about half of this wave down or this move down. And then you'd look for a wave 3 that breaks out to the downside. So in any case, we should be looking for a an impulsive move in one direction or the other, whether it's after this bounce up to the downside we get an impulsive move, or off of the low we get an impulsive move. Now, there is one other scenario, and as we can see, the market is pushing pretty high here after hours. We just closed the market. You don't usually see a candle like this, but there is one other scenario, and that is that this move up was a wave 1 up as a leading diagonal. It's not really an impulsive move, and I don't trust diagonal, so I'm not too confident in that. And then you'd look for a wave 2 down, which we got right before the close. And then you'd look for a pretty strong move up in 3 here, and they are trying to move strongly over that high. And essentially what the bears need to do is they need to hold 41.51 as a traditional wave 4 up to 41.62. Anything over 41.62 tells me that this is the end of the down move and we are in a bounce of some sort. So if this move up that we see here after the close continues and it takes out 41.62, then we'll have to see what the structure of the wave is to the upside to decide whether we should look for continued downside or a start to the move toward 4,300. Over on the NASDAQ, okay, guys, I've had to make an on-the-fly adjustment here in the video on the NASDAQ. As you can see, after hours, NASDAQ took off and has retraced more than 50% of the entire wave down. So it's really unlikely that this is a wave 4 at this point. So on the NASDAQ, all right, what we're looking at here is an ABC. And we've been talking about this level, this 15,531 level. And remember, guys, the NASDAQ has been telling the truth the entire time. It has followed fib pinball perfectly. Came back down. I told you the ideal target was 13,531 to 13,600. They came down right into that area. And they do have an impulsive move up and a breakout wave here that has gone over the 50% retrace. Now, when I say impulsive, I mean it's a start to an impulsive wave. I don't mean it's complete, but you do have a wave 3 breakout setup here. And then you look for a 4 or 5 to complete a wave 1 up, then wave 2, and then break out from there. So NASDAQ is telling us that we have the potential for the upside already starting, and that we could expect to see a pretty strong rally at that point. There is still the possibility that this is an ABC. They still need to make a full impulsive move, so this would be your A wave up, you get a B, and then a C, and then you see a downside. That would be the bearish path. We've already retraced 50%. Over 13,880 makes that unlikely that we are in an ABC higher. So this would be the area we look at to kind of say, okay, the NASDAQ's trying to break out impulsively to the upside, and it's no longer likely to be an ABC at that time. It still can be, but it's less likely. So a quick on-the-fly adjustment live in the video here as I'm recording. NASDAQ has pushed up over the 50% retrace, which tells us this is unlikely to be a wave 4 and give us a 5 down to complete the move, which means we're either going to see an ABC and then a very strong move to the downside, or we'll see NASDAQ continue here with a 5-wave move up to give us wave 1 to the upside. Then we'd look for a wave 2 down. So you'd get a 5-wave move up, wave 2 down, and then take off toward that 14,400 target I've been talking about since a few weeks ago, in 14,000, 15,000 area I talked about since last October. That would be the 618 retrace, and a pretty common target for the NASDAQ to retrace in the bigger B wave we've been talking about. So overall, guys, with the NASDAQ doing what it's doing in after hours here and breaking above the 50% retrace, it does make it more likely we're going to be looking for an ABC higher into that 50% to 618 retrace, or an impulsive move to new highs. So little adjustment there in the video, kind of interesting. I'm guessing NVIDIA's earnings were good. They were coming out tonight, so that's most likely what's causing that. But in any case, the retrace over the 50% level tells us that this is very unlikely to be a wave 4. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We just started our training program, and our first training course is Elliott Wave for beginners. It's Elliott Wave the way I use it and teach it. It's for people who are just starting out with Elliott Wave, or even people who think they understand Elliott Wave, and it does come with both memberships. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the trading material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months. So I don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures the trade that's so unique. It's something you kind of have to see to understand, and it's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, We'd love to have you in these rooms so we can all make money together. The key takeaways for today: ES is not as bullish as NASDAQ. It has not reached the 382 fully at 41.51, but with NASDAQ moving up like that, it does tell us that we should be looking either for an ABC to the upside or potentially an impulsive breakout that would take us back over the highs toward 4,300. So a little adjustment in what we talked about earlier in the video based on the live move on the NASDAQ. Over on the NASDAQ, again, looking for a potential ABC up toward the 13,818 area to 1380. If they push over 13,880, that is a sign that they are going to take this higher and take out these highs toward that 14,400 area. We also would like to see an impulsive move. However, if we see an ABC into that area, we would look for a very strong selling move to the downside. That would take us down to start the next move down in the C wave toward the 9,000 area. Guys, that is the market update for today. I will talk to you tomorrow.